Sovereign digital currency, e-rupee. The digital rupee, symbolized as e-rupee, serves as India's official central bank digital currency, CBDC. It is specifically designed as the exact digital counterpart to India's physical fiat currency, the Indian rupee. As a direct liability of the Reserve Bank of India, RBI, it operates with full sovereign backing and maintains the exact same legal tender status as traditional banknotes. This means that one e-rupee will always hold parity and be interchangeable one-to-one with one physical rupee. The RBI mints these digital tokens and issues them electronically, eliminating the immense security printing and logistics costs traditionally associated with physical cash management. By transitioning to this digital sovereign asset, the country aims to formalize economic activity and provide a secure alternative to private, unregulated cryptocurrencies. Because it is legal tender, the e-rupee ensures complete trust, safety, and guaranteed settlement finality for the end user. It functions as a secure store of value in a digital wallet, mimicking the experience of carrying a physical leather wallet but existing entirely on a mobile device. Ultimately, this innovation forms the cornerstone of India's modern digital economy, shifting the population away from cash dependency while preserving the inherent security of central bank money. Two distinct variants: retail and wholesale. To cater to the highly diverse needs of the Indian economy, the RBI deliberately structured the e-rupee into two distinct variants. The first is the digital rupee for retail, e-rupee R, which is intended for everyday transactions by the general public, businesses, and merchants. The retail version essentially functions as digital cash for person-to-person, P2P, and person-to-merchant, P2M, payments, fostering broader financial inclusion. The second variant is the digital rupee for wholesale, e-rupee W, designed exclusively for restricted use by financial institutions and large intermediaries. The wholesale CBDC focuses on streamlining interbank settlements, the call money market, and large value clearing processes. By utilizing e-rupee W, banks can settle secondary market transactions in government securities with unprecedented efficiency. This wholesale mechanism significantly reduces transaction costs by preempting the need for complex settlement guarantee infrastructures and heavy collateral requirements. While the retail pilot initially targeted a few select cities and banks before expanding, the wholesale pilot quickly demonstrated the technical feasibility of instantaneous interbank clearing. Together, these two variants ensure that both grassroots consumers and top-tier financial institutions benefit from the underlying blockchain and tokenization technologies. Two-tier distribution architecture. The RBI has implemented a sophisticated two-tier distribution model to ensure the seamless rollout and management of the digital rupee. Under this framework, the central bank maintains absolute control over the creation and issuance of the digital tokens. However, the RBI delegates the consumer-facing responsibilities to commercial banks and authorized non-bank payment operators. These financial intermediaries act as the distributors, handling customer onboarding, identity verification, and the provisioning of digital wallets on smartphones. This intentional design choice prevents the RBI from being overwhelmed by the administrative burden of managing over 1 billion individual customer accounts. It also preserves the crucial role of traditional banks in the economy, ensuring they continue to intermediate financial services without being sidelined by the central bank. Furthermore, these distributing banks remain strictly responsible for enforcing Know Your Customer (KYC) protocols and anti-money laundering (AML) regulations. By relying on the established trust and existing networks of these banks, the RBI can safely scale the e-rupee ecosystem. Expanding the network to third-party payment apps is also part of the roadmap to leverage their vast user bases and familiar interfaces. Fundamentally different from UPI. Although the Unified Payments Interface (UPI) currently dominates India's digital payment landscape, the digital rupee operates on a fundamentally different technological and economic premise. UPI acts strictly as a messaging interface that instructs banks to move money from one physical bank account to another. In contrast, the e-rupee is the actual money itself, serving directly as a tokenized digital asset that holds intrinsic value. When a transaction occurs using the e-rupee, the digital tokens move instantly from the sender's wallet to the receiver's wallet, bypassing traditional bank accounts entirely. This direct transfer achieves true settlement atomicity, meaning the transaction is settled immediately and finally, just like handing over physical cash. Because it does not rely on the back-end core banking systems of commercial banks to settle each transaction, it completely removes interbank settlement risk. Consequently, if a commercial bank's server experiences an outage, UPI transactions would fail, but e-rupee transactions could still successfully process since they rely on the central bank's ledger. The e-rupee also serves as a store of value that people can hold independently of a commercial bank account. Ultimately, while UPI will continue to thrive for fast bank-to-bank transfers, the e-rupee adds a resilient, cash-like layer to the broader financial ecosystem. Seamless UPI interoperability. To ensure rapid market acceptance and ease of use, the RBI mandated crucial interoperability between the digital rupee and the existing UPI ecosystem. This means that users do not need to search for special, dedicated e-rupee QR codes when visiting merchants. Instead, individuals can simply open their e-rupee wallet app and scan any standard UPI QR code displayed at a storefront. The integration allows the digital currency to seamlessly piggyback on the vast infrastructure already established by millions of UPI-enabled merchants across the country. For shopkeepers, this interoperability eliminates the friction of navigating a completely new onboarding process or managing a separate settlement system for CBDC payments. Several major commercial banks quickly integrated this feature into their respective digital rupee applications to improve the consumer experience. This cross-platform functionality bridges the gap between traditional account-based payments and the new token-based digital cash. If a merchant is scanned via a UPI QR using an e-rupee app, the settlement simply adapts to the existing UPI timelines, providing massive flexibility. Ultimately, this strategic blending of India's two most powerful digital financial tools ensures the e-rupee app can achieve population-scale utility much faster. Resilient offline capabilities. Addressing the digital divide and intermittent internet connectivity in rural India was a paramount priority in the design of the digital rupee. To solve the connectivity paradox, the e-rupee incorporates resilient offline transaction capabilities that do not require a live data connection. Using technologies such as near-field communication, NFC, users can simply tap and pay to securely exchange digital tokens device to device. The digital wallets can validate these transactions locally by verifying the cryptographic signatures of the tokens right on the hardware. This feature is incredibly critical in remote villages, mountainous terrains, or during widespread network outages where standard UPI payments would instantly fail. Furthermore, the ecosystem supports older feature phones through unstructured supplementary service data, USSD codes, and SMS string protocols. By dialing simple short codes like *99#, users without smartphones or mobile data plans can seamlessly participate in the digital economy. This offline resilience actively mimics the physical reliability of paper cash, ensuring true sovereignty of access for all citizens. Consequently, the offline e-rupee empowers marginalized demographics, particularly rural women who often lack smartphone access, to independently manage their finances.
Please subscribe for daily updates.